Hey, TFNN, educating investors.
The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We pick things up and markets just climb into green territory. As I was talking, you have the S&Ps up by less than 1/2 of a point this morning, but you got a little bit of volatility in the overnight session. We're as low as 66.55. We're trading at 66.68, flat right now. NASDAQ 100 positive by single digits, up by 4 points, 24,526 right now. You jump over to the Dow. Up by 68 points this morning, up by 0.2%, 46,187, and the Russell up by 0.4%, pushing the highs of Monday and Tuesday. The Russell up by 8 points, 24.29. The Russell particularly volatile in the face of rates. Where are we going with rates? It is Fed Day, so we got a Federal Reserve overnight lending decision. What's their rate? 2 p.m. Eastern time. We got a press conference at 2:30. We'll air that press conference live right here at TFNN on Tiger TV. And we jump over to yields this morning. Now let's see. When I was doing the newsletter this morning, we were at 4.02, and that's where we are. 4.02. 4.02, the yield on the 10-year right now. And you jump over to the dollar, though, and that may be the story. As you talk about some weakness yesterday to 96.55, we're trading at 96.75 right now. We're up a bit, but the trend is lower prices. And you take a look at the daily, and yeah, we're coming down for the lows of 96.37. That was made on July 1st. And the 10-year yield, I keep thinking, I keep talking about it, but it's important to remember the 10-year yield was only at about 4.2%. Only at about 4.2. We're pushing 4 right now. You take a look at the yield curve in terms of where we are up and down the curve. The 2-year right now at 3.51. Okay, the 10-year at about 4.02. The 30-year 4.62. All those markets not really moving that much this morning. Maybe a basis point or two. But yes, you're talking about a 10-year. Okay, that's 20 basis points lower. And the dollar pushing those lows nonetheless. 96.74 right now. We got dollar weakness. But you got gold pulling back a bit, and boy, silver is really pulling back. We'll get to that this morning. But gold reaches 37.39 yesterday. We just dipped to a 3,600 handle. We're trading at 37.11, $3,711. You talk about a price for gold. Gold off by $13 on the session right now. Silver. All right, you see the pullback on silver, man. You're talking about pullback yesterday from 343. You dipped to almost 41.50. We're trading at 42.10 right now. And I put out a full report of the gold report yesterday. Look at the silver, a nice 1-to-1, right? We're just getting above that 1-to-1 expansion area. The run has been remarkable, folks. You take a look at some of these equities, right? Hecla. Now we're going to open 30 pennies lower, okay? And this is the type of volatility. And hey, you want to ride it out. You want to let it ride, right? Push the limits, let it ride. Let it ride. Okay, but there are risks to letting it ride just like there are rewards. And we're getting to the point in these lofty equities where you're talking about a pullback of 10% over the period of a day or two, right? For Hecla, from almost $12 to $10.80. Okay, 10% pullback. Now, 10% pullback is not a lot when this equity just traded up more than 100% in 6 weeks. You jump over to First Majestic, similar action this morning. You were up to $10.90. You're going to wipe out almost 10% of that equity. You're still going to open at $10 right now, okay? And boy, we had some great volume on these silver equities going back to last Wednesday. When is that, Thursday? The 11th. What's the 11th? Yeah, last Thursday. All right, there's your acceleration. On some of these silver equities, you do it on volume. Look at the volume in that day, right, compared to some of these other days in terms of the volume. That's First Majestic. Jump over to Hecla. Okay, Hecla had some big runs, not exactly in the same correlation, but boy, some nice volume. And the one thing, though, is that, we're going to open at $11. We get volume at Hecla at about $10, folks. Very reasonable to think that we're going to come back, test that $10 area. We get a gap at 9. Longer term, these metal equities look great. But shorter term, boy, it has been a one-way trip to higher prices, folks. And what I'll say is, okay, I think we might have a weaker dollar coming in. But some of these metal equities have gotten a little bit ahead of that. And in the back of my mind, I'm saying to myself, okay, let's be careful here. In many instances, you have an instance where it's buy the rumor, sell the news. Okay, there are 3 cuts priced into this market over the next 3 meetings. There's 4 to 5 cuts priced in over the next 4 to 5 meetings. And gold has just traded to all-time record highs. But even in the last 24 hours, I mean, just look at where gold was yesterday at 10 in the morning. Okay. We're basically at highs, 37.39. And then you look at where the dollar was, okay? Now, we already had negative action overnight. But the dollar was at 96.90. We traded all the way down to 96.55. We were at 96.38 when yields were at 4.2%. And so part of me is saying, okay, we got weakness in the dollar here, but gold has been leading the dollar, right? As in gold, if you take a look at where we were when we had back here the dollar at 96.37, that was July 1st, folks. Okay? There's July 1st, right? So you just had gold trade from 32.50 to 37.39. That's not a dollar move. So don't expect it to happen on the other way in the same way, right? We just appreciated in gold to the tune of, what, almost $500. Yeah, you're talking about a move of almost 15%. And meanwhile, the dollar is right back to where we were. Okay? So even if the dollar trades a little bit lower right now, gold could be a situation, buy the rumor, sell the news. Okay? You bought the rumor, dollar's going to have weakness, rate cuts are coming, and eventually when those cuts come, it's already factored in. And boy, there are a lot of cuts into this market right now, folks. Okay? A lot of cuts. Now, you talk about, cuts, you talk about the housing market, of course. Okay? This one's encouraging if you're in that housing market this morning. Mortgage refinance demand. Now, I always say percentages on small numbers can be deceiving. Okay? And we have had very small numbers when it comes to mortgage refinance demand, etc. But nonetheless, spiking 60%. You see a mortgage rate drop to 6.39 from 6.49. Pretty amazing that the conforming loan balance is $806,000. Adjustable rate mortgage share of activity increased. Highest level since 2008. Okay? Adjustable rates. People think rates are going down right now, folks. Okay? They're taking out refinance mortgages. They're going into the adjustable. You don't go into adjustable mortgages when the market's at lows, right? You go into adjustable rate mortgages potentially when the market has high yields. So yes, the market's thinking lower yield. Hey, we find out today. We'll get into some of the numbers, but the market right now thinking we're going to get 25 basis points with an outlier risk of 50, 2 p.m. Eastern time today. Market's flat. We'll come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. You jump back to the market, slightly in the green this morning. And yes, all eyes going to be on Chairman Powell, 2 p.m. Eastern time. They'll make an announcement, and you jump over to where we are in the market. The market's looking for about a 95% probability that they cut by 25 basis points with an outlier risk, call it 6%, so 94 and 6, that they go by 50 basis points, actually. You go out to December, about a 70% chance we get 3 cuts. 25% chance right now that we get 2 cuts. Keeping in mind that we're going to get a lot of data by the time we get to the December 10th meeting, right? We're going to get September data, we're going to get October data, and we're going to get November data. So yes, the market right now thinks there's a 70% chance, but we are going to get a lot of data by then. But nonetheless, the market thinks we're going to go cut in the next 3 meetings. You go out to the March 18th meeting, and the market's actually thinking 4 cuts. Yeah, with potential for even 5 out there, right? 3 to 5 with 4 being the preponderance. Folks, we get 100 to 125 basis points of cuts by March. That will factor into mortgage rates, okay? There's only a certain probability assigned right now. We get 100 to 125 basis points of cuts, man, over by March. And the kicker is, Trump doesn't even get to put in a new Fed chair until after the April meeting, right? And the April meeting right now, the market thinks 4 to 5 cuts. So the market's expecting that we're going to get 4 to 5 cuts even before President Trump gets to replace the Federal Reserve chair. There's a lot of cuts priced into this market, folks, but if they materialize, okay, I think you will see, talking about mortgage refinance demand, okay, we'll go back to that one. Application to refinance a home jumped 58% last week compared to the previous week, 70% higher than a year ago. Benchmarking it versus the year ago, not a huge, some of this stuff is so volatile. Rates have been all over the place that year to year is not as important as benchmarking on certain areas year to year. Refinance share of mortgage activity was almost 60%, up from 48.8%. People like this, right? And this is what's going to stimulate the economy. Okay, this is with a mortgage rate right now of 6.39%. Do you know how many people have equity in their homes? I'm sure you do, folks. You might be one of them out there, right? Tremendous amount of equity, but no way were you ever going to give up your mortgage that you had at a lower rate. Well, guess what? Now we're talking about 5 to 6 years past when you probably refinanced if you locked in that rate, whether it was, and that's as late as you can go, right? There's a lot of people that are locked in from the 2012s, the 2014. Rates were low for so long. We're getting a pickup in activity as mortgage rates are at 6.4%. You ever get a 5 handle, folks? People are going to say to themselves, you know what? Yeah, I'm going to jack my rate up tremendously. Okay. If you got a 3.75, you get a 3.5 mortgage. But guess what, folks? You also have hundreds and hundreds of thousands of dollars of equity in that home. And for a lot of people, it's going to be worth it to access that equity. And that's what you're seeing take place right now. And that equity is going to turn into cash. That's going to turn into the economy. And at the same time, you're going to have the ability to decrease the monthly payments that go with that mortgage. Adjustable rate mortgages, share of activity, 13% of total applications, the highest since 2008. Yeah. Now, adjustable rates typically go fixed for 5, 7, or 10, right? So those loans do not pose the risk of early payment shock that some of the pre-2008 ARMs did. Borrowers who do opt for an adjustable rate are seeing rates of 75 basis points lower than the 30-year fixed rate loan. Pretty cool. But yeah, I think you're going to see some action in that home market, folks, if things play out. And hey, there is the potential for inflation. You better keep it as one of those pockets that you're keeping your eye on, folks. You jump over to some of the home builders. We've had a little bit of a pullback from the run. Lennar was at about 100. You go up 40% from where you were at the June lows. We've backed off a bit. Lennar going to be up by $1 right now in the pre-market. D.R. Horton, quite a run as well, from about 110 to 180. We've backed off just slightly on that area. KB Homes, you make a run from 50 up to 65. All right, speaking of rates, speaking with the Fed, speaking of the Fed, so it's like, you know, this one writes itself, folks. So who else was taking out mortgages with multiple homes claimed as his residence? Folks, this is everywhere, okay? I mean, the irony of the president facing all of the court drama with his deal, all over the fact of securing financing, okay? And then you have Cook getting vilified out there, and now who else did it? Good old Treasury Secretary himself. Yeah. He agreed to occupy 2 different houses, principal residence at the same time. This goes back to 2007, but don't worry. This is how it is, right? We're just going over every little detail of someone's past. Conflicting agreements obligated him to occupy homes in New York and Massachusetts, main residence at the same time in 2007. Here's the kicker, though, okay? No sign of any wrongdoing. Rather, this case demonstrates an incongruity in home loan filings. It's not necessarily proof of fraud. For all of you out there that were saying that this is enough, right? This constitutes fraud, all of that. There were plenty of people doing that, right? The president made the allegations. They said that's cause, that's illegal. Do they need any more? Well, there it is, right there. Treasury Secretary's got to go too, right? No, he doesn't, folks. That's the point, okay? He doesn't, okay? And when you talk about Cook, all right, there's already different parts of that case, and yeah, they probably need to button this up. Where are the banks doing the due diligence on some of this? But then you have documents later along in the Cook, okay, part of things, where the loan estimate issued by the credit union weeks before she got the mortgage referred to it as a vacation home. So, but hey, you can't write this stuff, right? Who else was doing it? The Treasury Secretary. So, almost writes itself, right? And it's going to be interesting to see. How much dissent do we get? Potentially go from 50 basis points? We're going to get a little dissent, I imagine. You know, you have Moran in there. For the first time, he'll be in there. Pretty sure he's going to go to 50. He's not going to show up for work the next day for Trump and explain why he only said 25, right? Got to live in reality, folks. That's what's happening. He agrees with those opinions. That's why he's there, but that's why he's there. He agrees with opinions. Well, there's going to be some dissent. He might not be the only dissenter. All right. We're coming into the opening bell. You jump around to some of the Magnificent Seven. Amazon shares. We got a little action going with China, right? NVIDIA. China's not going to buy their chips. So we'll talk a little bit about that. Not even going to buy the chips that the U.S. is going to allow them. But guess what? China, they don't want second-rate chips. They're going to try and do it from home, and I don't blame them. Why would you be AI? That's like trusting your Defense Department, right? That is the future. NVIDIA off by $2. Market's flat. We're coming back for the open, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and we have the S&Ps up by 4 points right now. You got the NASDAQ in the green by 11, Dow up by 121. And yes, you jump over to NVIDIA shares. You're down by 1.25% right now for NVIDIA. And just pulling it up, and yeah. Oh, what did I just do? There we go. All right. So yesterday we were talking about the antitrust laws. But yeah, China's basically instructed that nobody is to buy those special chips. And here it is. So China orders firms to stop buying NVIDIA AI chips. It's the Financial Times out there. Cyberspace admin of China told companies this week to stop testing the chip, cancel orders. Before that, several companies indicated that they would order tens of thousands of those. Jensen Huang, I'm disappointed with what I see, but they have larger agendas to work out. He's a very astute man. He knows he's in the middle of quite a battle between the U.S. and China. NVIDIA has found itself thrust in the center of that delicate negotiation. I would say so. And yeah, as I mentioned, China was already coming after NVIDIA. We talked about it on the show yesterday that they violated antitrust in the company. And it is remarkable when you talk about antitrust in China, right? Like they're worried about fair competition, antitrust. But yes, they do not want second-rate chips, man. And I would agree with this person. China clearly prefers to develop AI at its own pace on a domestic tech stack. Better to bite the bullet now than rely on the U.S. tech that can be restricted upon a whim. I mean, you think they want to go through this in perpetuity, folks, right? As in go through the negotiations with President Trump, whoever's the next president, and be prone to, I mean, AI chips of the future. They're going to try and get it done, and this is not going to stop. Okay, so factor this into NVIDIA. Now, Jensen Huang had already told analysts not to factor in the China income because this is so volatile. So that's where it goes. Okay. And you know, Darth, you bring up some points, man, but folks, the reason why I bring up the Treasury Secretary is because there's this pretending that somehow it's not political, right? It's like, oh no, we discovered that they did something wrong and they got to go. It's all political, and we don't want it to become political in the long term, folks. Okay, you can fire someone for cause, all right, but if you're in the camp that Cook shouldn't go and the Treasury Secretary should stay after reading you that, then you're just endorsing the politics of the Fed, and you're allowing that to happen because that's what we're living in right now. It's like, I don't know how you argue that all of this pressure is not going to come back. I mean, go look up, folks. Okay, the inflation of the 70s, Nixon pressuring rates lower, and then go look up what rates went to in the 80s and what it took to get it back under control. Yeah, Mr. Arthur Burns, right? And I'm pretty sure that Chairman Powell doesn't want to be remembered as Arthur Burns because that's like the worst legacy you can have. Chairman from 70 to 1978. And yeah, they were even cutting rates when inflation was pushing almost 5%, folks. Okay? They were cutting rates when inflation was pushing 5%. Well, we know where that went. We know where it went indeed. And you know, you can make excuses that there's always going to be political pressure. There always is, right? And of course there always is, because every politician wants it lower. We are in a new area, though, folks. Okay, don't think that that somehow we're immune to adding $4 trillion to the debt over 10 years, cutting taxes for the wealthy, and then installing a Fed that is going to run it hot. Okay, there are risks out there. The jobs front, that's a risk as well. Okay. Yeah, and that's the problem with the Fed right now, where they're trying to go cautiously. And as I mentioned, we get 3 months of data before December, okay? You take a look at where this 10-year has been before, folks, you talk about a roller coaster, okay? As in how many times the market's gotten ahead of itself, right? This is just the 10-year. Okay, we're not even as low as we were a year ago, which is remarkable. Not even as low as we were a year ago in the 10-year. And then remember how many times we've had a seesaw battle. Okay? Where, I mean, let's even back it up even further. It's hard to remember, actually, how quickly, right? You're talking about 2.5 years ago, the market was thinking that it was transitory and we were going to reverse in lightning fashion. No, that didn't play out, right? We got all the way up to 115.13 right now. You had yields well below 4%. No, not happening, right? Boom. You go way higher to 105. You make it up there again to 115. Boom. In no time, we're at 106. Okay? And why did this keep happening? Well, the reason why this kept happening was that the economy was fine and the Fed was worried about inflation. Okay? The jobs front has changed, though. That is for sure. These are different numbers that we did not see in this spike to lower yield back here, to this spike to lower yield back here, right? At that point, we just kind of thought that inflation was going to go away. The Fed was just going to pivot quickly. Well, now their hand is kind of forced, right? We're talking about 22,000 jobs a month. So, yes, we're getting a cut right now. We're probably getting 25. But they are going to remain cautious, at least until May when Chairman Powell is in there. Okay? But remember, folks, okay? Try and take the politics out of it and consider history and consider that CPI is at 2.9%. Retail sales are going up 0.6%. The stock market is trading at 66.70. And then you have refinance activity. Okay, you saw that refinance activity. That is going to be a stimulative effect on the economy. You bring down rates, people are going to refinance. We have been locked in on this higher yield for the inability to access that equity. The only risk, okay, the only risk to running it hot is inflation. Now, there's inflation comes with much higher interest rates, right? Now we get a third mandate that we're going to keep interest rates lower in the long term. Folks, I want you to imagine if you agree with what's going on right now, okay? We have a government that passed, and I'm just trying to recognize the risks. We have a government that just passed tax cuts, okay, that added $4 trillion of debt over 10 years. You have a president that's pushing control over the Fed like we haven't seen since the 70s. And then you have the Fed is now going to try and manipulate longer-term rates. If you believe in that and you're a supporter of President Trump, let's hope that we get the growth that we're talking about, okay? And, hey, this economy's on fire right now, right? But I challenge you to think about if a politician you didn't agree with passed a budget, no matter what it included, people said that it was going to add $4 trillion, and then at the same time they said we're going to now use the Fed to push down longer-term rates as you pass budgets that add $4 trillion over the next 10 years. Think about how those square on a longer-term basis. S&P up by 3. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps right now. 66, 67. We're flat. NASDAQ 100 down by 50 points right now. We jump around to some of those tech equities. So there's NVIDIA down by 2.4%, down $4 to 170. Micron shares down by about 0.9%. AMD down by 0.7% right now. Broadcom down by 2.5%. They're getting hit as well. Oracle shares down by $7, 2.3%. AI getting hit a little bit this morning. Amazon down by 1 percentage point. You got Microsoft down by 0.4% right now. Yeah, Google up by 0.2, but barely. So Netflix, they get an upgrade, up by 1% right now. Paramount Skydance chopping around, up by 1%, but that's 17 pennies. Basically flat right now. Warner Brothers Discovery, we'll see if we get any details in the future about that potential transaction, down by 0.9% right now. Disney up by 0.5% right now. Now, we talked about refinance demand going up, but boy, we do have some supply out there. Okay, I'm always watching this as a builder, folks, as someone with plenty of real estate right now. Housing starts fall to the lowest since May. Broad decline. Has builders' appetites, bloated home inventory, potentially slowing that down. New residential construction decreased almost 9% last month. Annualized rate, 1.31 million homes. The forecast was looking for 1.37. Okay. I mean, that's 60,000 homes. Starts of one-family homes fell 7%, 890,000, the lowest in more than a year. Multifamily construction also declined, falling 12%. Total housing on the left, single-family on the right. And home construction has slowed in the last few years as supply of new homes for sale reached levels not seen since the mid to late 2000s. Economists still see the oversupply of houses depressing construction in the coming months. So we got a supply. We'll see if we can eat through it with some lower rates. Building permits decreased 3.7% to that 1.31 million annualized pace, more than 5-year low. All right. Yeah, and you talk about the GLP drugs. So, story out there today, you got Lilly. There's the acceleration there. You were lower in the pre-market. Talk about a little volatility. Digest in this news. So Lilly's GLP-1 pill beats older Novo diabetes drug in head-to-head trials. It's a head-to-head going at it. The highest dose of that pill led to a 1.9% drop in blood sugar levels compared to 1.5% with Novo's drug. This is Lilly putting that out. Patients given Lilly's drug lost 8.2% of their body weight, roughly 18 pounds in 52 weeks. The Novo drug lost 5.3 or 12 pounds. So we'll see. Diabetes, of course, fat loss, side effects, stomach related. More patients stop taking Lilly's pill than Novo's. That's one of the ones, and the market's watching it. You better believe it, okay? But people voluntarily dropping out of these studies, it says a lot, folks, when, you know, we live in a society, and we have for some time, where weight loss, right, the holy grail, all this stuff, there's all this pressure to be skinny for health purposes and beyond. And think about what you got to be feeling like if you know that there's a promise to this drug, as in the future. There's a promise to this drug in terms of you stay on it, people are losing 10% of their body weight in a year. And even with that, you're like, man, this thing is crushing me. I am off this side effects, okay? Nonetheless, you got Lilly up by about 0.5% right now this morning. All right, jumping around to some other equities out there. Yeah, so Lyft's got a deal going with Waymo. So self-driving cars are coming to Nashville. Lyft and Waymo are expanding their autonomous ride-hailing service to Nashville in 2026. Spike to $26. You're back to 22. Take a look at this equity longer term. Be careful of this one, folks. But hey, teaming up with Waymo, gotta love that. Uber shares not loving that, down by 4%. Yeah. Jump over to Google shares this morning, up by about 0.1%. You know, when you think about a situation, folks, a buy the rumor, sell the move news, you know, remember what this market did in 2022, and we have a lot of different stuff going on right now, okay? But boy, it was so revealing when the beginning of 2022, folks, markets accelerating higher. Everybody thinks that inflation's coming. The Fed is calling it transitory, right? They don't hike yet. And when do they hike? They hike around March 14th in 2022. That was the beginning of their hiking cycle, okay? And the reason why I can recognize it so clearly on the chart is because the market rallied from 4,100 to 4,600 as the Fed began hiking rates. Did you hear that one? They began hiking rates, and the market said, we're going to trade equities up 10%, but guess what? It was a head fake, right? But the point was that in the short term, there was already that negativity priced in to a degree, okay? As we begin cutting, this market has been on fire recently. Okay? Don't be surprised if we trade from 4,800 to 6,600 and the Fed cuts and the market may experience a pullback. And listen, it could be a short-term pullback right now, Okay, but the market knows these cuts are coming. We're at 4% right now. We've drifted higher from 4,800. We're well above where we started the year at almost 6,000. And now we're going to get the cuts. The market knows we're going to get the cuts. Okay, so be careful out here thinking we're going to cut, and equities are going to go dramatically higher, because that has been priced in to a degree. And remember what happened when the Fed started hiking. We might get a reverse. Coming back, one more segment, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&P is up by 6 points right now. We jump around to some of those volatile equities. NVIDIA shares, you take a look, rebounding off the lows of 170. You're still down by about 2% right now. Yeah, Broadcom down by about 2% right now. Amazon down by 1 percentage point right now. So you got a little bit of a pullback going on some of those AI equities. They're talking about China and going forward. All right, so we get a Fed decision at 2 o'clock today, folks. All indications are that we're going 25 basis points. The only risk there is that they maybe go 50. Going to be interesting to see. Stephen Moran, first time he's on there. I'm sure Chairman Powell is going to get a few questions about him being on the meeting, his first meeting, the influence. If I was a betting man, I would bet that he's going to dissent and go for larger than 25 basis points. I don't think I could find any takers on the opposite side of that transaction, right? And yeah, we'll see what Chairman Powell has to say. The press conference. Now, as I mentioned, right, we got cut priced into the market right now. But Chairman Powell is going to tell you that, listen, by the time we get to December meeting alone, we're going to have 3 more months of data: September, October, November. You actually get November CPI on 8:30 in the morning, December 10th, which is the Federal Reserve decision day. So you're going to get the 3rd month of CPI data December 10th, and they'll have a meeting and an announcement at 2 p.m. that day. So they're going to get a lot of data, folks. All right, look at this Dow, man. Dow on fire, 46,386 right now. The Russell up by 20, and we check back in on yields and the dollar one final time as we come in. The 10-year right now down by 2 ticks, and we're talking about a yield of 4.02. And you jump over that dollar, DXY, 96.37. S&P's up by 3 right now. All right, folks, stay tuned. We got our man Basil Chapman coming up next. We got our man Larry Pesavento coming up today as well. All right, folks, and I'll see you this afternoon at 3 o'clock as well. S&P's up by 3, and yeah, I'll be live at 2 o'clock for that Fed decision as well. We got a lot of action, folks. Live at 2 o'clock, Larry at 1, press conference at 2:30. I'll be back at 3. Have a great day, folks.